those of you that don't know our stock, we trade on the venture. BRC is our symbol. We're also on the OTC under BKRRF. If any of you are over in Germany and are feeling daring, try us out on the Frankfurt. It'd be wonderful to know actually how that goes. So give us a shot over there too. Certainly going to be making a hell of a lot of forward-looking statements. We've got a lot to look forward to over the next 6 months. So, ultimately it's about silver today, but ultimately if you guys are watching, it's because you want to make money. I'm invested in this company. I control over 5 million shares fully diluted, and I'm all in here. I'm all in for two reasons. One, I like the fundamental case for silver, but mostly I really like our project and the team we've built, we've put together. It was a year ago today that we drilled our very first drill hole into our Tonopah West project, and that drill hole, as you can see, we released at the end of July there. It worked out to be the single best drill hole drilled in Nevada last year. We did 30 meters of a kilogram per ton silver equivalent on drill hole number 1. Since then, we've drilled in the order of about 60,000 meters up until today. By the end of the summer, we'll have completed about 80,000 meters, making us one of the most active junior companies in Nevada. Since then, obviously, we've gone on a hell of a run. We've just closed a $12 million financing, which included participation from First Majestic Silver. They recently just changed their motto, which was one country, one commodity, which they've had for the last 19 years, by getting into Nevada. They bought Jarrett Canyon and they bought a position in us. And I think you're going to see a flight of capital out of South America just because of what's going on down there. And when it comes to what we're doing, we're in the silver state of Nevada, and we're probably the most exciting story down there right now. Fully financed to get through what we're doing this year. And as I said, the next 6 months, we've got a lot to look forward to. And that's because we're coming out with our maiden resource estimate in Q4. What that's going to mean is, we got a lot of drilling to do between now and then, and we got a big backload of assays that we'll be reporting very shortly and continuously, all of which will be thrown into the pot of our maiden resource estimate, which other than drill hole number 1, that's going to be the single biggest catalyst we've ever had. As I said, lots to look forward to. So our project, Tonopah, it's called the Queen of the Silver Camps, and it's literally halfway between Las Vegas and Reno. In fact, the highway that connects the two goes right across our property. So in terms of infrastructure, it really doesn't get much better than this. Now, this district 100 years ago would have been one of the most significant precious metals districts on the planet. It produced 174 million ounces of silver and 1.8 million ounces of gold. So that's roughly 100-to-1 silver gold ratio. For those of you looking for exposure to silver, as Peter said, only about 29% of silver produced actually comes from silver primary projects. Another 15% of silver produced comes from as a byproduct of gold mines. Well, we're a pure play precious metals district, but we're silver primary and 100-to-1. So you're getting 100-to-1 exposure to silver, but you're getting backstopped by gold. And generally, people that like silver like gold. And we're a pretty good investment when it comes to that. So when everyone thinks of Nevada, they think of it for the massive gold endowments. But Nevada is known as the silver state for anyone that's been down there and driven on the interstate. And it's known as the silver state for two reasons: the Comstock lode and Tonopah. Comstock slightly beats out Tonopah in terms of historic production, but I'll tell you what, based off what we're seeing, I think we're going to put Tonopah as number 1 when it comes to silver jurisdictions in Nevada. So that's what I'm working towards, and I'd like to rewrite the history books there. Now, mining's a global industry, but in terms of where silver's produced, it's generally, about 2/3 of silver's produced in Latin America. Between Mexico, is number 1 by a country mile. Peru, you've got Chile, Argentina, Bolivia is huge. Now, that's all well and good, but when you look at jurisdictions in terms of investor favorability, as laid out by the Fraser Institute recently, Nevada's number 1. Mexico doesn't even make the first column in the on their list. Peru's number 34. And for any of you that have been following what's going on in Peru right now with the new presidential elections, where the guy who just won it is saying he wants mining companies to leave 70% of their profits in the country. Do you think that's going to put an M&A premium on those companies, or do you think it's going to put a significant M&A premium on what we're doing in Nevada? I'd opine that we'd command one of the highest take-up premiums on the market, and what we're trying to do right now is rush our way to the finish line of getting this resource out, because I frankly don't think this time next year, this project will still be in our hands. It's too good to be true in terms of what we're drilling. As Peter laid out, what you want is grade, you want jurisdiction, you want catalyst. We got all three, and I think we're going to be just rushing to the finish line on this, and we'll see what happens. So the Tonopah Silver District, as I said, this time 100 years ago, one of the most significant precious metals districts in the U.S. In fact, to this day, Tonopah represents one of the most significant mining discoveries in Nevada, not just because of what they discovered in the district itself, but it led to many other discoveries leading up to World War I, including Goldfields, Bullfrog. Goldfields ended up becoming the largest city in Nevada in the early 1900s, and that was all on the back of the rush. So much of what's known as the Walker Lane District was discovered on the back of Tonopah. In terms of grade, historically, this is going to blow many of you guys off your socks, but it averaged in the 30 years or so of commercial production at 1,300 grams per ton silver and 16 grams gold. Bonanza stuff. Here's and really the story of the district itself. It had nothing to do with the quality or the fact that effectively the mines in the district were mined out. I mean, the reason that Tonopah still isn't top of mind and we're the first group to go back in 100 years later and drill into these mines had nothing to do with the I guess reserves on our property being depleted. It had everything to do with the business side of mining and metals prices tanking in the mid-1920s leading up to the Great Depression. You'll see on this bar chart here, production went straight up. I mean, they found these big outcropping veins at surface. They were supergene enriched. When they first started producing, the early days, they were producing, in some instances, over 10 kilograms silver. And then as they went deeper and followed it along strike, it averaged out at 1,300 grams silver, 16 grams gold. Eye-watering numbers. But what happened in 1923 was that they unpegged the price of silver from $1 an ounce, which it was leading into that. And within 3 years, it fell to 35 cents an ounce. It sent every company belly up because, of course, they were operating on debt to fund development, to fund work. And really, all these companies ended up in Chapter 11. Now, what's unique is we're the first group to consolidate this district really since. What you'll see in the lower portion of your screen there is what the Tonopah Silver District looked like in 1912. All those different colors represent different publicly traded operating mining companies. Cut that down the middle, we have the entire western half. Now that's significant because it's an east-west trending set of veins in this district. Now the discovery was made on the east side of town, and what they did was they mined all of these veins from surface and they followed them westward. So early on, the east side of town were effectively mined out by their estimation, and the west represented the blue sky. It's where the last commercially producing mines were in the district when they went belly up. And guess what? It's what we've consolidated, put together, and are the first group to go back in and drill into the many historic mines on our property. And we've shown some significant new life. In terms of infrastructure, it doesn't get any better than this. I mean, there's our drill rig set up between a Subway sandwich shop and the Comfort Inn. We got water, we got electricity, we got everything you need. We got casinos in walking distance. So, as I said, a year ago today, we started drilling. We only set out to do about 7,500 meters. We ended up doing 30,000 meters between June and December. This year, we didn't, our targeting's been so good that the model's predictive. We didn't have to stop. We didn't have to recalibrate. We decided, you know what, we're going to go full throttle, and we're going to lay out at least 40,000 meters. Right now, it's actually looking more like 50,000 meters that we'll complete. And we'll go from first drill holes into our property to delivering a maiden resource by Q4 this year. So it's been exciting stuff. But it's quite an exciting program because we're not just doing infill, we keep stepping out. Since we laid out our 40,000 meter program in January, we've more than doubled the known strike of all the veins in the district. We've hit 3 new veins as we're going just by fluke. Guess what? We've got 4 drill rigs at site right now. 3 of them are focused on the resource, and we're using the 4th to continue stepping out, expanding, testing new targets. We just drilled a 1-mile step out from one of our big zones. So if that hits, I might be retiring. So anyways, as I said, we've now identified in a year 10 different veins. If you're to lay them out end to end, that's 5 kilometers of strike. Now, what's more exciting is the grades we've identified. In our drilling last year, we identified 40 significant intercepts ranging from a meter to 29 meters thick. We're using a 200 gram per ton cutoff. And using that, we had grades, we had 40 significant intercepts, but moreover, we hit multiple 2 kilogram plus silver, pure silver hits. We hit gold up to 26 grams per ton. Right now, we're just showing significant size potential. So, we're a train on the tracks at this point. As I said, the model's predictive. Pretty much all of the veins that we have identified so far are open, except where they end up at the property boundaries. The western half of our portfolio still is yet to be really tested, so we keep stepping out there, as is the northern half. So the main portion that we're focusing on for the resource is what's known as the Denver Paymaster Bermuda veins. There's a series of 4 veins there that were mined together, and they represented the last commercially producing mine in the district up until about 1930. So the center part of your thing there. Now, the biggest vein we've identified there is called Merton. And if Merton keeps going the way it is, I'm going to be naming my firstborn Merton Pollard. Because right now we've got about 1.5 kilometers of strike delineated. It's averaging about 3 meters thick. And of all the drill holes into it, we're averaging 798 grams per ton. Merton alone has the chance to be a household name within the silver industry. But guess what? We've got 9 other veins that we're drilling out too. Merton's still open for expansion, but this is going to be the big kahuna of the project. I mean, right now, based off what we're seeing, it could be anywhere between 3 to 4 million tons. Anyone that wants to do the math there, average it out at say 800 grams. Eye-watering stuff. And as I said, that's just one of our veins. The vein that took the market by storm last year was called Victor. Victor represented the thickest vein in the district, and they got all the way down to around 1,880 foot level in the 1920s when they got turned around by water. Well, we've confirmed the down dip extension of what they were mining there, and we've now got about 500 meters of strike all the way to a property boundary there, and that's where we hit that 30-meter zone of 1 kilogram per ton. Back in the old days when they were mining these things, they did 0 drilling, so they were just mining what they could see in front of their eyes. We've now hit 2 other new vein zones in this area too, and up to 3.6 kilos of silver equivalent in some of these veins, in some of these intercepts. So, huge opportunities there. Victor's not even going to be included in our resource. That's just pure upside. We've also hit on the western half of this big faulted structure. So, of the Pittsburgh Monorfault, which the historic miners thought might have been the end of it. Well, we've got 600 meters of strike on that side now too. And that's not even going into our resource. This is sort of what the section will look like for a resource estimate. And as I said, this is the DPB zone. You see Merton there, Paymaster, Denver, Bermuda. We've also hit 2 new veins in this zone too. Those 2 new veins are now up to 400 and 500 meters each, respectively. Who knows what else we're going to hit along the way. But I can tell you what, at the grades we're averaging, at the jurisdictional advantage we have, being number 1 compared to, as I said, Mexico 42, Peru 34, Bolivia, Argentina, all these things, what we, and the 100-to-1 silver gold ratio, I think it's too good to be true. And I think that there's going to be a flight of capital outside of South America, like you've seen with First Majestic, like you've seen with Fortuna, Hochschild. All these companies are facing the same issues. If you want to explore with upside opportunity, it's not just about resource expansion, it's about M&A premiums.